get out of this place. We could fly over our problems, watching clouds from a private jet. But you don't have to worry about the rain when only champagne gets you wet.
What's going on, YouTube? It's your favorite wealthy crab, Andrew, here with another episode for Option Wednesday. So, guys, we're going to go ahead and take a look at Google. It's a new recent option trade and stock position in my portfolio. So, guys, I'm going to walk you through exactly what we're looking at, how to close, how to get the most out of your option trade, especially on short terms. So, of course, if this video is going a little bit fast, it's kind of because I'm doing this in real time. So I just want you guys to be able to see exactly what's going through my head and exactly how this trade plays out in real time. If you guys like these videos and you want to see more of them, please hit that like and subscribe button so that I can bring you more videos like this, especially on Wednesday. The whole goal of this channel is to help you guys to be able to learn how to trade options, how to make a little bit of money on the side so that you can increase your income. So with that being said, guys, let's go ahead and get set. I'm going to start off with Robinhood because, again, this is one of my favorite apps when it comes to reviewing stocks and options and seeing how price movements move. It's very simple and straightforward. It gives me the information that I need. There are other platforms that I have, but this is one of the ones that I do prefer. So with that being said, guys, we have Alphabet Class C. So there are two types of stocks for Google. They have a C and an A. Main difference is just voting rights. But as you guys can see, the price is changing here in real time. When it opened up, if you guys are not familiar with stocks, at the opening of the bell and the closing of the bell, there's typically a lot of price action or movement, whether that's up or down. But a lot of times the stock or the share price will shake out. At that point in time, you got to decide on your entry point. So what I normally do is I'll come over here to the advanced tab. I'm going to go ahead and pull up the 1 day because I want to look for where does it cross. So right here, it crossed at 6 a.m. This is going to be pre-market. Right up here, you see there was a very high, quote unquote, buying situation going on. So as you guys can see, it was at 141, but now it's dipping back down. Now it's at like 140.95. But the 1 day, the 10-day moving average and the 50-day moving average are getting ready to cross. And that's typically how I time my buyings if I'm trying to do a timed situation. Again, you want to find the best opportunity to buy and sell. So with regards to options, guys, you guys all understand if you see my videos that the price of your call options and your put options do change with the price of the stock. So in this situation, I do have a call, which I'll show you in one of my other brokerage accounts. Again, guys, I have more than one. Typically, when I do these videos, I show you Robinhood, and then I'll also show you some of the other ones. But right now, as you guys can see, Google is trading about 140.78, which is a good number. So we'll come over here to my other account, and we're going to go ahead and go to the option that I have for that one. So let's go ahead and try to find Google. Let's see. So we got Google right here. And again, this was a recent position that I took. So as you guys can tell, right now we are looking at a price point of 140.83. I bought it at 141.92. I did a call not too long ago in order to sell this stock. I want to say it was at the 142 strike balance. So right here, guys, you can see Google 142 expiration for this Friday. And you can already see I've already made 58% of the contract. So what I tell you guys is that whenever you make a large portion of the contract, you need to go ahead and buy to close, right? So if you make 50% on your option on a weekly trade, just go ahead and close it because the price can change at any point in time. I could look up and later today at 2 p.m., the stock could skyrocket. It's past my strike point, and then I have to sell it at 142. Now, it really depends on what your long-term goals are. If you want to keep the stock, as in you want to keep Google long-term, then you want to close it. If you don't care that it gets called away from you, then it's no big deal. Try to keep 100% of the premium. But again, you can always close an option and then turn around and sell it right after. So in this situation, we're going to go ahead and click on this little arrow button. We're going to click this buy. And again, guys, right now I'm showing you this on Merrill, which is one of the Bank of America platforms. I typically will switch back over to Robinhood just so I can see what the options bid and ask is. So again, we're going to go to the sell. We're going to go to call for December 22nd, which is 1 day. I had the 142. So right now it's bidding at 46 cents or $46 total for a contract. I had a previous close of 30 cents, a high of 69, and a market of 47. So I think it's safe to say that if we put in 45, 46, we would probably get called on that one. So let's go ahead and just do a close for 45 at a limit price, 0.45. We're going to do that for today. We're going to close all of our positions, which is just one. And so right here, it's going to tell us it's going to cost me about $45. Your total gain on this trade was $65. Now, remember, guys, I could turn around and sell another call option, which is more than likely what I'm going to do for this week. So I want you guys to see how you can still double dip and make a little bit more money. So we're going to go ahead and preview this order. Hopefully it goes through. We're going to submit the order. Alrighty, order submitted. So currently it says 0 executed, 1 remaining. So let's just see what happens if it gets executed at 45. It may not. It just depends. So we're going to leave that there for now. So what's going to end up happening, guys, is once I close this option out, as you can see, it's gone up a little bit more. Probably the price had a little bit more price action moving upwards. If I have to pay a little bit more, I will, just so I can go ahead and get it out the way. So now you're seeing it's 49.50, constantly moving, but it is what it is. So with that being said, what I would normally do typically is I might say, hey, let me move my strike point up a couple dollars, right? Maybe I don't think it's going to get to $13, or maybe, I mean, not 13, 144. And even if it did, I'd still make almost another $200 roughly, right? Now, what if I decide, oh, it's not a big deal, I'm just going to let the contract expire worthless? Well, there's always no guarantee that it expires worthless, right? Right now it's trading at 141. All Google has to do is go to 142 by tomorrow, by the end of tomorrow, right? And I would have to sell it at 142. Google is one of those stocks that I'd like to hold long term. It's not going to kill me if it does get called away. But again, if the market conditions are right, I would rather it not get called away. Now, as you guys can see, the price is moving up. The contract is changing. It's showing 52 now. It was 53, 48, constantly moving around. So, it's kind of going through that phase right now where it's being bought and sold, right? So in my situation, what I could do is I could buy the close, and then I could turn around and move it up $1 to 143, or I could decide to move it out a little bit further. And maybe I decide to do 142 again, but I'll collect $154 on that contract, right? Or I might decide, okay, maybe I want to keep it long term. I think there's going to be more upside. I might move it out a whole month, and then I might try to collect 320, or I might try to collect 220, whatever it may be. Again, I have different options on how I want this trade to go. But again, you're able to make those trades on a daily, weekly, monthly basis, whatever it may be, right? So with that being said, guys, you can see right here, that's where it's going at. If I decided I wanted to move to a long-term play, or as some people call it, a leap, I could do the same thing, move it to the 145, and then go ahead and collect $1,655. That's what it's going to say right here. When I click the plus sign, it says one contract, $1,654. If I wanted to, and I wanted to hold this for a long-term play. Or I can move it up a little bit higher and I say, hey, I think Google's going to maybe go to 170 within a year. Go ahead and collect $810 and move it from there. Now, again, in this situation, you can always close these options at some point in time. It doesn't have to be today, doesn't have to be tomorrow, doesn't have to be a year from now. You can close it at any point in time. As I said before, you guys can see these prices are going up. If I go back to the price history, you see there's still some movement, which is good. Again, if you're wanting it to get called. You see that it dropped down. It's kind of petering out. Now it's going back up. If I go to the advanced chart, I can see right here that the stock has pretty much, it's hard to zoom in there, it's pretty much got to its cross point. Normally, typically what will happen is it'll bounce downwards. But what's weird about Google and some other companies that are one of these bigger ones is you're going to see in a second, you see these crazy, like weird jumps up and down or whatnot. So they typically, traditionally, on a long-term scare, as you can see right here, they'll cross, come up, cross for a second, and then go right back out. Almost like a fake out. Best way to explain it, right? So Google, if you look at the 1-year chart, you can see when it does cross, it's more like a fake out. So that means it's not necessarily going to go down, but it's also not necessarily going to go skyrocket up, but it is on a normal trend upwards, as you guys can see in this chart. right here, it crossed, went all the way down to like 132, maybe 50 cents down, and went right back up, right? Cross again. Now, right here, this is a little odd because it was October 30th. A lot of stocks sold off at that time. So we're going to disregard that information and not consider it important. And as you can see right here, cross again, went up, cross again. It's only moving within 50 cents, maybe $1 whenever it does cross. So with that being said, if I go back to Google on the chart, you can see it's trading at 141.09. This is where I would consider it a fake out. So it's not going to necessarily going to make a big move downward, but it's also not going to make a big move upward. But the long-term trend for the stock with regards to looking at that chart is going to be in the upward trend. And it's like that with a lot of stocks. So again, guys, you just want to make sure to always look at that information. As you can see on this 1-year chart, Google at one point in time, almost a year ago, 89. But again, as you can see, it has a very steady growth upward, right? Don't get faked out with some stocks. Now, some stocks will give you a very clear indicator that you can actually sell it when they cross. Some not so much. Hey, sorry, that's my crazy dog, guys. If you happen to hear that, I don't know if I'll be able to get him to calm down. But anyway, so with that being said, guys, if you happen to see that, make sure that you pay attention to the history of the chart, the history of the price trend, so that you don't get faked out. And again, guys, I